Abe Safa here with Century 21 Harrelson Group in Myrtle Beach, South Carolina. Just wanted to give you a quick market update, specifically about the condo market. My last couple of videos, market updates that I've done, I'm getting so many questions specifically about the condo market, and wanted to just address that one segment of our market here and tell you what is going on. So as you can tell by the title, Myrtle Beach, South Carolina condo demand plummets. And I'm going to explain to you what is going on and explain to you the 5 reasons why it is going on. But first, if you will, please, if you like this video, by the time I'm done, please like it. Please subscribe to my channel so you can also get these updates as I do them. I do a couple a month just to keep people informed of what's happening in the market. So let's talk real quick about the condo market, specifically Myrtle Beach. I'm going to put up a chart. If you've been listening to me by now, you know I'm a numbers guy. So just take a look at this right here. What this is the month's supply of condos for sale. Now it says homes on this chart, but it's not. This is just condos, and this is only resales, not new construction. So basically what a month's supply is, it's also called an absorption rate. Basically what that means, based on today's levels of sales, how quickly things are selling relative to how much inventory is out there, this is how many months it would take us to actually sell through all our inventory. So absorption rate or months supply of inventory. Right now, as of the end of July, we're sitting on a 6.5 months supply of inventory. So 6.5 months it would take us to clear out all our inventory if nothing else new hit the market. Now, just to give you a little bit of reference, the rule of thumb for years, decades, as a matter of fact, is 6 months is the line that we draw between a seller's market and a buyer's market. Anything below 6 months supply of inventory is usually a seller's market. Anything above a 6 month supply of inventory is a buyer's market. So we hit a buyer's market a few months ago, technically, even though it's felt more like a buyer's market for a while now, ever since the interest rates doubled. So it's sales relative to inventory. If you look at this chart, we have to go back to 2017. So 7 years ago, May of 2017, to see the same level of 6.5 that we have today. So 7 years back is where we are now as far as inventory goes. If you'll see, scroll over to the middle of this chart where it says 2020, you'll see we had a little bit of a spike there. That's when everything shut down during COVID. So early 2020, that month supply spiked up to 6 months supply. But that was because there was nothing happening. Everything was shut down. And then as soon as things open back up again, you see that big slide all the way down. That's when the market started getting hot. And then it got really, really hot, bottomed out beginning of 2022. We were down to as much, I think, as a 3-week supply of inventory. That's when everything was selling in a matter of a couple of minutes. It hit the market. You got multiple offers and things sold. And then all of a sudden, the interest rates increased. As a matter of fact, they just doubled almost overnight on us. And that's when you started to see inventory start to increase. So reason number one of why we're seeing such little demand relative to what's on the market right now is prices. Prices have not come down much relative to what they were at that bottom that I was talking about. Let me go ahead and remove this chart. So now there are certain pockets in town, certain buildings, certain resorts where we're seeing a pretty significant depreciation in prices. But those are specific to a couple of different buildings or even certain segments or certain parts of the market. And if you're interested in knowing in more detail, give me a call and we could talk about which buildings they are and what segments they are. Reason number two, of course, mortgage rates are still up there. Even though they've come down a little bit the last 30 days or so, they're still very, very high relative to what people got used to for years and years of just free money pretty much from lenders out there. Reason number three, this started happening around the same time as when the market bottomed out. As I told you, early 2022 is HOA dues started increasing. So what started happening is things have just gotten so expensive, it's costing more and more to operate these buildings and these resorts. So we're seeing HOA dues really go up almost across the board. Like I have yet to see anybody or any building or development or community where the HOA dues didn't go up. And then number four, which I think is a big one that's really got me concerned, is insurance costs have gone through the roof. The last couple of years, like my single family home, I've lived here for 36 years. Just the last 2 years alone, my insurance has gone up 65%. Okay, and I'm not on the ocean front. right? So insurance costs have gone up significantly, especially on these condo buildings, and that's really driving up the cost to own these things. So in some places you'll see HOA dues going up to offset it. In some places you're seeing insurance assessment. So if you own a property here in town, you know what that's like. You probably have gotten one. Or in many places you kind of see both. A little bit of an assessment right now to kind of get through this year's insurance to be able to cover it, and then an increase to be able to help offset future increases that are coming. And then finally, reason number 5 is rental income has been down. I've got a bunch of friends that own motels here in town and hotels. I'm friends with a lot of management companies, or people in management companies, I should say. And pretty much across the board, the average is somewhere around 15% rental income is down. So couple all these things together, buyers are not getting excited. That doesn't mean condos don't sell or can't sell. They are still selling. Okay, I think there's roughly 180 units right now on the market that are under contract with a buyer. So that's 180 buyers out there buying currently right now. But there's 1,300 units, and this is just strictly oceanfront. If we get off the oceanfront, those numbers even increase more. So there are buyers out there. About 13% of all oceanfront condos are on the contract. About 21% of overall condos are on the contract. It's just there's not a whole lot of excitement. People aren't rushing to buy these things because when they look at the numbers, it's just not making sense for a lot of them. Now, where is this going to lead us to? It's hard to predict. The last couple of months, it went up a little bit, the month supply of inventory, but it's kind of been flat between 6.4. I think it was 6.4 in May, 6.4 in June, 6.5 in July. So it's almost like flattening out. I hope that it does for the sake of condo owners out there. But because of all these reasons I just gave you, it's been difficult in the condo market, and we have seen a plummeting in buyer demand because of those reasons as well. If you own a property here in town, give me a call. My number you'll see is at the bottom. That's my personal cell phone number, my email address. Please reach out to me. Would love to talk to you. If you're looking to purchase, give me a call as well. I can guide you to a couple of properties that are out there that you might be interested in as well. Again, Abe Safa, please like this video and please subscribe to my channel if you want to see future videos from me.